My name is Geoff Pyne, and I'm one of the senior traders at Actions to Wealth who bring you this broadcast each and every Sunday. I'm going to attempt to unravel what happened late last week, I suppose, and then dive into what I expect the week ahead to look like as we go into a new week of trading. Let's start this week with let's go with what happened last week, I suppose, would be the best way to start. And we saw the US dollar come off. Two things, really. We saw the US dollar come off, and we saw the Japanese yen go up. That, of course, has been the conjecture for many, many moons. We've been waiting for that yen to turn around. And I don't think we've been waiting so much for the dollar to come off, but we've certainly been waiting for that yen to turn around. And that appeared, well, it was the case with the Bank of Japan intervening not once but twice from where I sit anyway. Maybe that's not the case, but certainly the intervention was there, and we saw the yen appreciate. The dollar had some bad news during the week with PMIs coming out negative and the Fed not so bullish. In fact, I'm no economist, or nor am I a fundamentalist, but it appeared to me as though the Fed statement was a little bit benign, if I can put it that way. And the market didn't like it. So, well, the market liked it in terms of the stock markets, but the currencies, the US dollar came off. And of course, later in the week, with the non-farm employment change, formerly known as NFP, the numbers there were pretty dire. And for that reason, we saw, and of course, the services PMI wasn't great on yesterday as well. So that's why we saw the dollar come off appreciably. The yen kind of timing there, I think, with the intervention, certainly they timed it with the Fed. I'm not so sure about the non-farm payroll. Anyway, those two things combined saw a bit of a change in the currencies over the latter part of the week. So let's have a look at those. The dollar index, as you can see, came off its highs, and I've now formed a new trend line with these highs here. And this is a classic slingshot setup, I've got to say, although it's only the second test of that trade line, or trend line, if you like, on a weekly chart. It does look to me as though this is ready to keep going. We are at a resistance level, both from a trend line and a horizontal point of view. Not sure how strong that level is, and if the dollar can burst through it. With no real dollar news coming out this week, it's likely that the sellers that gained a little bit of momentum through those news events last week may well continue to sell the dollar off. That may well be the case, but if I look across here, I can see a pretty strong resistance, support, resistance, resistance, support level. And you can see that price didn't want to go below, or didn't want to stay below that level with the dollar late into the week. So it has come off its low, but certainly it came off its high. There's no question about that. Tricky, I've got to say, but my contention would be if the sellers don't continue to sell the dollar, then they'll probably have a crack at this high, and it's a perfect breakout area for a slingshot trader in particular. The euro, you'd expect to be the upside down version of that, and it is. Has bounced off the support level, which is new. I've got to say, we've now got a new low here, and that joins that one. Therefore, I've got a trend line. Not convinced, again, like the dollar at a support level, then the euro is at a resistance level where it's been former support, former support, former resistance, former resistance here, and former resistance here, and a little bit of support there as well. So it's a little bit tricky trying to say, okay, the dollar is going to be strong, euro is going to be weak, based on that support and resistance area. But where do you go? I'm not convinced either way, I've got to say. The Aussie, we've been waiting and waiting and waiting for the Aussie to appreciate off the back of this double or tweezer top bottom, if you like, at a support level, that being the trend line. We did get a higher low, and that has pushed the Aussie a little bit higher. Unconvincingly last week, I suppose, but you could argue that it came off its low more than it came off its high, and that's why we've got a bullish bar. You could also argue that we're probably, or not probably, you could also argue that we're through that major support or resistance area. I'll point that out just a little bit clearer. That may well be that level there, but it could also be that level there, which is where we're at. So it's a bit of a cloud of a price on the Aussie. I'm not convinced either way, and that's pretty much the theme of these indexes, the currency indexes that I'm looking at this week. I'm not convinced in any way, shape, or form which direction we're headed in. I'm still looking at this, however, from this macro point of view, if you like, that this tweezer bottom should force the Aussie a little bit higher. Not sure what the fundamentals are telling me, but if there is to be a currency that I would like to trade against the dollar this week, it's probably the Aussie. Kiwi falls into that category as well because in exactly this, also not quite exactly the same position, but it has bounced off support, doesn't have that big tweezer bottom sitting there, and we are very, very congested in this pennant formation. So Kiwi, again, at a support level or former support level, making it resistance. Is it as strong as the one above it? I doubt that's the case. And if I put that horizontal line in again, I think that level is a fair bit clearer to me, where it's been support here, resistance here, support back here as well, and support here. That tends to put a bit of a ceiling on the Kiwi for the moment for me. So don't really want to trade through that level. The yen, of course, we saw a big rally in the yen last week due to the intervention and numbers going the opposite way. But you can see exactly where we finish on the yen. It's at that double bottom, which of course you would expect is offering resistance to the yen. Therefore, without another intervention, I'm suspecting that there may well be a little bit of a pullback here on the yen pairs. And that's kind of where I'm at. That's the cool, Gary, cool. Just got a message. That's the thesis I'm going with. So I'm going with a weaker yen, at least to start the week. I'm looking for a pullback as we've hit that resistance level, which of course was formed of very, very strong support. If we were to get above that and then retest it, of course, things change for the yen. And that long term bearishness that the yen or sell off that the yen has experienced over many moons may well turn around. I'm not yet convinced that that is going to be the case. And at this former support, now resistance level, I'm willing to look for a setup to trade against the yen. And I'll point that out a little bit later. The Canadian dollar, as we anticipated, did bounce off the bottom of this range once it hit the bottom of the rectangle, is now giving us what I consider to be a beautiful candle that may well preclude a further buying scenario. Off the bottom, I'm always looking for a higher low, which this may well be. It's not proven yet on the weekly chart. Maybe we can have a look at that on the daily. That would be interesting. So the daily chart, there you can see that big bounce off the bottom. I'll make that a little bit clearer for you. Ooh, I keep getting these things. I hate that when that happens. I'm a bad driver of TradingView. Let me try that again. There we go. So if I make that a little bit clearer for you, that big double bottom, well spaced out, has presented us with that higher low. Are we willing to say we're going on with the job? And look, I am. I absolutely am. And on the weekly chart, you can see that that is not yet formed, that candle there, but it may well lead to higher prices, in my humble opinion. I don't want to just jump in and say trade that in the morning, because anything can happen. We can get gaps up, gaps down, and I don't want to play around with those. But I think any pullback here would get me very, very interested in trading the Canadian dollar long against not sure what yet. Maybe the yen, given that I've got that resistance area. The Swiss franc, I'm kind of ambivalent on this one as well. Can I talk louder? I'll try and talk louder. Let me try. Louder. Thank you. I'm hoping I'm not bursting through anybody's earbuds at the moment, given that somebody can't hear me. Well, as loud as they would like. I'm trying. I'm getting it up there as much as I can. If other people have got problems with hearing me, let me know and I can probably shout. You can see that the Swiss franc has broken through this long-term ascending channel and now retesting that. That would, in most circumstances for me, suggest that this is a sell. So break, bounce, advance, bounce, continue. That's what I'll be looking for, A, B, C, in other words. So am I convinced that that's the case? Well, I think we've probably gone through this horizontal level. So I'm not really convinced that that's the case. But if there's a gun put to my head, what I'm going to say is I'm thinking perhaps a little bit more downside on the Swissy. The Great Britain pound has bounced off this now new support level, which is a very, very condensed, if you like, rising wedge, suggesting downside ultimately. But in the meantime, we are at support here, a little bit of resistance here, bit of a mess there. But yeah, weak. I'll call that weak resistance. And therefore, I think the pound has probably got claims to go back to the top of this pennant formation before it goes anywhere else. So I won't say I'm bullish the pound, but I concede that there's a potential for this to go a little bit further in its quest for highs. So they're the currency indexes. Let's go to the charts now and have a look at what I would normally look at this time of the week, or this time of on a Sunday as it is, which is this time of the week. And we're looking at Aussie yen. What I'm looking for here are reversal bars. And I think you'll find on the yen pairs that they are there in spades without question. Aussie yen is no different to that. The interesting part about Aussie yen in my world is it's come pretty much off its low, substantially off its low. And of course, it didn't take out the big buying bar the previous week. I think you'll find that's the case with most of them. But I'll come back to Aussie yen because I think there's a potential buy on here, given what I've just said about the yen and the propensity in my world for this to not reverse its momentum from last week, but certainly bounce. And profit taking may take place, etc., etc. So I'm expecting the yen will have a cool start to the week, if I can put it that way. The former high here, this high here, which precluded the retracement to the enormous buying against the yen that we saw, Aussie versus the yen, just took off amazingly. And then, of course, it came to a level where somebody had to say, that's enough, or enough's enough. And that's exactly what happened. But on Aussie yen, you can see that we have a game changer bar, on the daily game changer bar being a key reversal bar. I think if there's no gap tomorrow, that an entry above that bar, you might want to slip your stop loss down here somewhere. But I think the bar could produce a bit of a bounce on this pair. Where to? Great question, because we don't have a very, very strong resistance level. Maybe in this area, monthly pivot maybe a little bit higher before you take your profit, but I think that would be not the worst potential trade on the boards tomorrow, if the gaps are not substantial, of course. I'll get to that. I'll come back to that. CAD versus the Swissy on the weekly charts, also a game changer bar. Now, this one's a little bit more interesting in that it's telling us to sell here. So game changer being a key reversal bar, it's telling me to sell on the monthly pivot, something that I'm not happy doing because it is strong support. As you can see here, when we bounce off the monthly pivot, we bounce off the monthly pivot. We've done it there, we've done it there, and who's to say we're not going to do it here? Not me, certainly not me. So I'm more on the side of the bulls here than I am on the side of the bears. The fact that we've got a game changer bar here probably gives me a bit of a license to have insurance, if you like. What I mean by that, if I go a little bit tighter, if the game changer bar or the key reversal bar actually works, then sellers should come in here and continue to drive this down. And if I'm honest, we are in a protracted, long-term downtrend on this currency pair. For that reason, the game changer bar should actually be taken at its face value. Me being me, however, has a contrarian view about that. And like I said, if the sellers don't continue here, I expect the buyers will come in. And if they do, then here's where the sellers are wrong, above last week's candle. So I would again contend that if there are no major gaps in the market tomorrow, a buy order above this bar here, again, you need to consider where you're going to put your stop loss below the bar or stop loss below the swing. Becomes a choice of the trader. I'm not going to predict anything here about gaps in the market, and that's why I don't trade on a Sunday. I want to see exactly what's happened. What I would say is if this does start to get a little bit of momentum to the upside, you may find a better entry than what I've given you above that bar. We shall see. Of course, we have CAD yen. The difference with CAD yen and Aussie yen, as I pointed out, is CAD yen's closed very, very near to its low, whereas the Aussie yen pulled off that low quite substantially. For that reason, and I don't really have anything on the daily chart that suggests to me that this is going to bounce or retrace off that big move on the yen, then I can't consider CAD yen at all. I can't trade it short. We've missed all that sell-off. Have to wait for a pullback, but I ain't going to trade it. Swiss yen, pretty much exactly the same. I suppose you could say it's come off its low and at a pretty good point, really, at that monthly pivot. Not quite as good as the Aussie, but it's there. It has credentials, in my humble opinion. You do have that daily reversal bar. So buying Swissy yen, I don't think is off the table either. If you go back to the currency pairs that I looked at before, the currency indexes, I think the Aussie's got a little bit more up its sleeve than the Swissy, but the Swissy is not dead and buried by any stretch of imagination. I'll go to the Euro yen, and Euro yen, as you can see, similar to CAD yen, didn't come off its low very, very much after that big sell-off during the week, so that doesn't qualify. That's Euro yen. I'll go through another couple of the yen pairs. Pound versus the yen, same thing, closed on very near its low, so very, very difficult for me to say I want to buy pound versus the yen. Though, again, that is my quest for the week, is to buy something against the yen. The Kiwi, of course, which is another Comdol, is a commodity currency, for those of you who are not familiar with that terminology. Did come off its low quite substantially. If I go to the daily chart on Kiwi versus the yen, the thing that concerns me, not about the potential for this to bounce, but the longer term view here, and I think I said this to my group last week, if this does close below this trend line and then retest it, I think there's a selling opportunity here on Kiwi versus the yen. It's the only one that I really want to jump into in terms of being a yen bear, yen bull, and therefore a Kiwi yen bear. I think an entry on the daily chart below this bar tomorrow, if, as I said before and say every week, if there is no big gap in the market, then I think that's absolutely tradable. Entry underneath Friday's bar. Again, your stop loss is a little bit variable depending on your risk profile. You could trade the bar itself by putting your stop loss above it. You could put your stop loss above that swing. You can put your stop loss above the monthly pivot. Many, many options there for you. But I think that's a distinct possibility as a sell if the yen buying is to continue. I think this one is probably the one I'd want to sell, Kiwi versus the yen. And finally, the yen pairs, dollar versus the yen, did come off the low a little bit, but not as much as it did on the Aussie and the Kiwi. So for those reasons, I think Aussie yen is a potential buy on the daily, but I think Kiwi yen is a potential sell if there's no big gaps in the market. The only other two pairs that are on my watch list this week are CAD versus the Swiss. I mentioned this earlier. And I'll just repeat that for those of you who didn't pick it up. This is really interesting, CAD versus the Swiss. We've been waiting for this for a long, long time to reverse. And finally, it looked like it broke above a substantial level, that being this low here. Probably got that a little bit low, actually. There's that level there. So this is the monthly chart I'm looking at in a downtrend for the longest time. And every time we tried to trade, or we, when I say we, I mean I tried to trade this long, I could only get a little bit out of it and then it would sell off again. A little bit out of it, sell off again. A little bit out of it, sell off again. Here we are this time. It looks very much to me like we've set up a clear false break scenario. False break meaning we've broken the horizontal level, we've consolidated below it, we've raised above it or broken back above it. And now with last month's bar, not even to mention last week's bar, we've retested that area, which is the breakout area. For that reason, I'm completely against the game changer or key reversal bar, which is this red bar of last week. And I think an order long above it is far more slingshot-like or contrarian-like to me than is a sell below it. So again, gaps notwithstanding, I'll be looking to do exactly that. So buying above this bar, probably stop loss below the monthly pivot. If you want to be ultra conservative, below the swing, that will be a trade for me tomorrow morning for sure. The only one I haven't mentioned, I've mentioned Aussie yen. The only one I haven't mentioned is pound versus the Canadian dollar. Now, pound versus the Canadian dollar, as we remember from our currency indexes, both were kind of a little bit ambivalent. The pound probably looks like it's got a little bit left in it. And if last week's bar, sorry, that's a daily chart. If and I've gone to the daily chart on purpose because it gives me the illustration that I wanted to show you. The weekly chart, of course, is also showing the long-term trend line has been retested and rejected once again, closed a little bit below or on actually that monthly pivot, suggesting to me that there'll be downside. So when I look at the daily chart, I see a retest of the top of our rectangle. I see a sell-off and I see a little bit of a rally. What that suggests to me is that there's a false break of this trend line. False break being break above, consolidate above, back underneath, and now we've got that retest and rejection. So my contention would be that, again, if the buyers don't continue here and it doesn't look like they want to, then the sellers will kick in, which means an entry underneath this bar, I'd certainly put my stop above the swing, however, maybe even above the highs here. The problem with that is the monthly pivot is absolutely dead in the way. and not what I would like it to be. Is there a solution to that? Well, probably there is. And again, gaps in the morning are going to probably dictate where this lies. But what I would contest is if you're alert to it in front of the charts you could use that trend or trade line, or you could use this one here. If you were to get price above here, yet failing to take out these highs, similar to what I've described on the daily, where we've gone up above the trend line, consolidated back below it and retested it, which is why we like an entry here. 4-hour chart could be exactly the same as that. We could have a situation where, and I will try and depict that as much as I can. If price were to come up here and fail to take out these highs, then sneak back under either this one or this one, doesn't matter which, and retest it, then that gives you your entry. You don't then have to worry about the monthly pivot, because you could enter here or here and take some profit before you hit that level, therefore eliminating the risk of price going kabang and taking you out with a loss. So that would be exactly what I'll be looking at on pound versus the CAD. So let's summarize before I leave you and go back to the three that I'm looking for. First is Aussie yen. If I can actually get rid of this drawing, that would be good. There we go. First is Aussie yen. So Aussie yen, I'm looking to trade the daily game changer bar, not the weekly, but the daily. Game changer, for those of you, again, who aren't familiar with it, is simply a key reversal bar, where the low of this bar is lower than the low of the previous, and it's closed on or near its high. Now, don't be concerned about that pivot, because that will change, that being the daily pivot. No gaps tomorrow, or even a little gap down would be good. Entry above that bar, stop loss below it, get some profit in the bank before you hit the monthly pivot, and probably looking to exit at the weekly pivot. So it won't be a super duper reward trade, but I think it's definitely on the cards. If you can pick it up on a 4-hour chart, even better, then your reward could be far, far greater. The second one is pound versus the CAD. And on pound versus the CAD, I'm looking to trade this false break. Much prefer to pick it up at a better level, of course, but I'm very, very much aware of that monthly pivot there as well. So pound CAD short underneath that bar. Okay, I'll have a look at gold, no problems. And that's my consensus, is to get this down to here. Pound CAD at some stage, may take some time. And of course, the third one is CAD versus the Swissy, which we've been over a couple of times. Buying this, not selling it. Okay, let's have a look at gold, shall we? I'm a gold bear, have been for a couple of weeks. Let me get rid of some lines here because they're old. Am I still a gold bear is the question. Well, if I have a look at the big picture is telling me that gold has been on a tear, an absolute tear, right? This is the monthly chart. An absolute tear since, when was that? When did it start? February? March. In March, you got this massive breakout above the 2000 level. It then hit an imaginary resistance area, because there ain't no resistance up here. Then it's come off a little bit, as you might expect, people taking profit, etc., etc. And on the daily chart, what do I need to see? Well, sorry, I'll go back to the weekly chart. What do I need to see to actually tell me that gold is doing one of two things? What do I need to see? First thing I need to see is confirmation that price is going longer. How do I get that? Well, I get that by retracement back to a previous breakout level. That's for me. I mean, this is my analysis. This is the way I work. That could well be there. May well be a little bit lower. It may well be the monthly pivot. Any of those in combination would be fine. So for me to buy, I would need to see a bounce off a previous level. I couldn't possibly buy here because it's on such a tear. I've missed the opportunity. Can't chase it. Not my way, not my style. I then think, okay, if it's not going long, is it going short? If it's going short, I need to see confirmation of that also. And that comes to me in a pretty clear picture. I need to see a reversal bar, number one. That's a reversal bar. I need to see a reversal combination. It could be a double top. It could be a shooting star. It could be whatever you want. I've got a double top sitting here on the daily chart. I then need to see confirmation of that in so much as I need to see a lower high. I've got that. I've got that lower high here in this little bar here. Had you been alert to that, that was an excellent entry. Had I been alert, well, I saw it but didn't trade it. My fault. Had I been alert to that, I could have traded that and made some money. Now we're looking at a situation where gold is uncertain as to its immediate future because we've got seller bar, buyer bar, seller bar come off its low, and now a doji on Friday. Weekly charts no help because I haven't got the confirmation of the reversal bar. Reversal bar, yes, I don't have a lower high yet. To see a lower high, I need to see some buying come in, just like we saw on the daily, right? So we got the daily double bottom, we got the lower low, we got a little bit of buying come in, and that's where that reversal bar plays a magnificent role. What we now have, in my humble opinion, is nothing. I can't accurately, I'll get that right, accurately predict what's going to happen next. It's very, very difficult to accurately, that's a hard word to say, accurately predict what's going to happen at most times. But in this particular occasion, it's very, very difficult for me to say. What I would say is that this bar here could well be telling because we've had inside bar, inside bar, inside bar. If it were to break short, which is my option or my directional bias, then I think an entry underneath that bar makes perfect sense. Where would I put my stop loss? Well, I wouldn't put it above the bar because this could oscillate in here for quite some time. Where I would put it is probably above that swing, covering that little bar. That was really the place to get into this short if you thought so. So my target would be down in this area, around about 2170. So there's 130 odd points to gather there if you can find a way in my world. That's what I'll be looking for on gold. Am I convinced that it's going to go short? No, I'm not, because there's a great hunger out there for that commodity at the moment. But I do see from a technical perspective that the best place to buy it would be down here. And that is where I'm at. Moses, thanks for sharing this all. Oh, okay. You're in Kenya. Look, all you need to do is send an email to contact@actions to wealth. So that's contact@actions to wealth, and they will put you in the best position to do exactly what you want. And you're most welcome. I hope that helps. I'm unconvinced of where we're going right now, but I am of the opinion that this is best traded short at the moment and down to that level. Let's see how that works out. And I hope it sets up for me actually during the week. That would be good. Folks, that's it for this Sunday market update. Thank you very much for your attendance. It'll be all on again next week at the very same time. I hope you have a great week ahead and you can get some cash in the bank based on what my analysis may have suggested. Have a great week, everyone. Thanks very much to Sam for looking after me. We'll see you next time. Bye-bye for now.